Hey there, it's Ben from patternprofits.net. I wanted to talk to you briefly about proper entries. We seem to be discussing it quite a bit on FinTwit, so I wanted to do a brief video to kind of cover what I mean by a proper entry. And basically, it's about managing your risk. So what I have here is a chart of Futu, and you can see this cup pattern here with 40.99 pivot. So traditional CanSlim entry would have clearing this pivot of 40.99 on big volume, which we did get. That would be a proper entry within 5% of 40.99. So you've got about a $3, a little less than $3 cushion there. Anywhere in that area is a proper entry. And then since we didn't get really a handle formation here, it ended up forming much higher. You have to expect that you're probably going to get a pullback up here. You do not want to enter up in this area. It's too far extended from the pivot, and a normal natural reaction and pullback is going to shake you out if you buy up too high, which is why you want to get in as close to that 40.99 pivot as possible. This is the reason over here. In order to be able to hang in there through this shakeout, you've got to buy as close to this 40.99 pivot as possible, or else if you buy up 3, 4, 5% here, it's going to be very tough. You're going to be underwater over here on what's a normal and natural, reaction and pullback, and end up getting shaken out. Now, as an alternative to the entry up here, and one that I discuss often, is buying down here within the base on this power of 3. That's when the 10-day moving average, 21 EMA, and 50-day moving average kind of get real tight together, and then price moves above, and then you have this cloud support on the way up. So this is more risky here. As you see back here, those that tried to buy that back here ended up getting shaken out over here. But this entry on good volume actually worked, and you could actually sell some into the breakout. So there's more risk by taking it in here because you have some overhead supply over here. But there's also more reward when you get this move. So you've got to weigh that out, and everybody's going to have their own comfort zone. But the main thing that I want you to take from this is that the entry is about managing your risk. You can manage risk tightly here. You can manage risk tightly here. You cannot really manage your risk tightly and properly by buying in the middle of this or by buying way up here. You're going to get shaken out on what's just a normal pullback. So if you, let's say we're using anchored VWAP from the gap rather than moving averages and the pivot. If you're using anchored VWAP, same rules apply. You want to get in tight here. You want to get in tight to this anchored VWAP off the gap, or you want to get in tight up here as it comes through and the anchored VWAP starts to turn up. You don't want to get involved in this area in the middle if you're using anchored VWAP, because it's normal for it to come test that lower one. And if you buy in here and it doesn't break through the one from the high and comes back out, or doesn't take out the descending trend line, there's a good chance you're going to come back and test this lower one. So you want to either get it tight to support, or as it comes through resistance and turns the anchored VWAP back up. That way you can manage either of those entries very tightly if they reverse against you, whether the anchored VWAP off the high fails and price comes back below, or if it fails here and comes back down. Either way, you can get out with a minimal loss. Let me show you. Palantir's one we talked about last week about potentially, coming into this, especially when it was here, closed last week above anchored VWAP from the high, right up against the descending trend line. The reason we like this is because it could be tightly managed. If it came through that descending trend line, you could manage with that. You could manage with the anchored VWAP off the high as it turned up. But that didn't happen. So there was never a clean entry here. We didn't take it. And then it ends up rolling over. So now if you're looking forward, at this and thinking about an entry here, looking at it as we see here, 10, 20-day is up here, 50-day is down here. As you look at this, the 50-day with the anchored VWAP off of the IPO day, this is not a bad area to get involved if it allows you. If it comes back, down to this area, that may be an area that, we can manage. Right here where it's at now is a little tough. However, going back here again to the traditional, type entry, if you were to add an anchored VWAP off of this breakout, it just so happens that we tagged it back here and we're tagging it again now. So if this was something you were looking at, I wouldn't just blindly buy it here. I would wait for either a break below and then a reclaim, or an inside day that that then confirms up, or a bullish outside day that kind of dips below and then comes back up, and then using that level to manage it. We can manage that, but that's what I want you to take from this video, is that your entries are more about where am I going to exit, not coming in over here and buying above 30 because you think it's going to 50. Those people who bought back here, who said, oh, I'm buying at 30 because I think it's going to 50, they didn't have a plan to escape, and now they're at 23 and underwater and saying, what do I do? Well, that's because the entry, wasn't proper. So now you're kind of lost on what to do with an exit. If you manage that entry properly and think about your exit before you take your entry, the exit is much, much easier than blindly buying on the way up because you think it's going higher, but not having a plan as far as where you're, going to get out. And even with some of the more aggressive stocks, I got quite a few questions about this one, Neo Games, because it hit the scan, and asking, hey, is it too late to get involved? Well, even the most aggressive here, let's say you use your swing trader that uses the 8 EMA, you want to get in as close to this 8 EMA as you can, because it would be natural for this to pull back just like it did here. Maybe it comes up further and does that again, but it's very hard to grab this at, say, 36 in this area and hold it as it comes down, to 32 and 33 here. You're most likely going to get shaken out. But if you take the entry real tight against the 8 EMA, or back here, taking it real tight against these areas, these pivots, then it's a lot easier to hold on to for this ride and get out if it reverses against you. But even without that 8 EMA, 99 times out of 100, when I'm asked, hey, is it too late to get involved in XYZ? Almost always yes. The reason why I'm getting asked that is because you don't know where to put your exit. And when that's the case, the answer is always yes. It's too late. If you can't easily identify where you're going to get out, then yes, it's too late to get in. So if you were, using the moving averages, whether it's the 10-day, if it's the 20-day, you've got to let this go and kind of base, build another base here, and then try to get an entry. The most aggressive can use kind of these flag patterns and then use just price. You went inside day here and then came out of inside, into new highs. You got this big bullish outside day. That's fine, but that's, managing it with price alone, and probably for the more experienced and more aggressive traders. But I do share these setups. This inside day, as we talked about on the shorter time frame, is a triangle, and that can be managed with these stocks that have these huge moves. This one went from 24 to 38 rather quickly, and even back here when it was at 35, you kind of wait for this flag to form. 3 days here is very, very quick, but it can be managed with price or with fast moving averages. The 8 period EMA is popular. Some even use a 4 period EMA. But the whole point is, if you're going to buy something up here that's really extended, you need to have a way to manage your risk, and manage it tightly, because what ends up happening when you just come in and take something like this at 45 because you think it's going to 50, when that doesn't happen and this move comes, you're not sure what you should do and where to get out. So I hope this helps you. Entries, think about your exit first. Do not think about your targets until you know where you're going to get out. If you know your exit is $1 or 2%, then you can start working on and thinking about your targets. If you had a 3% stop and you're a swing trader, you can think about a 9%, 10% target if that's what you do. If you're managing it with the moving averages, just try to get in as tight to those moving averages as you can that makes sense. That way you can exit on a break of that same moving average. If you're using the pivots and more of the traditional manner of CAN SLIM, then maybe you set your stop about 7% below the pivot. You try to buy as tight to that 40.99 pivot as you can. Definitely not 5% beyond that, because then you're liable to get stopped out on a normal correction. And you try to be able to hold through this type of shakeout, and stay in for the bigger move.